Gold is about to make an incredible move to the upside, and that's what I'll be focusing on this video today, guys. And also I'm going to be talking to you about the mining sector and the correlation between the mining sector and gold as well too. Big mistake. I'm seeing some of my private clients do the exact same thing. Also, just give you guys a bit of an update across the actual indices, guys, to keep you updated with that. So let's get straight into it, guys. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, traders. So this is, I'm actually running a 7-day free trial to my complete Master Trader Lab. Plus I'm throwing in 6 bonus trading courses for free as well too. And so if you're interested in doing that, guys, I don't know when it's going to end. If you go to johnsflashsale.com, you can see all the details and get literally 7-day free access to the complete Master Trader Lab, and you can see all the details over on that page there. But it's just a bit of a special I'm running right now. And also, if you do stay a member, I'm locking in a really less than $10 a month. You can actually stay a member to the entire Master Trader Lab, which is over my last 20 years. My most powerful system strategies, techniques, mindsets, and chart reading strategies, you name it, is all in the Master Trader Lab. Plus, you get 6 bonus trading courses as well too. So anyway, guys, if you're interested in doing that, I think it's going to end over the next 1 or 2 days. Anyway, go to johnsflashsale.com and you'll be able to see all the details to that. And if you like it, hey, try it out for free. And if you're not happy, let me know. You know, be built. So all the risk is on my shoulders here. Anyway, let's have a look at the good old gold market here. So the gold market. Gold. I think gold is actually getting ready for, guys, an incredible move to the upside. And I've got something to talk about when it comes to the mining sector as well too, right? But look at this here, guys, right? For me personally, I really like L-shaped pattern setups. L-shaped pattern, right? L-shaped pattern. Now, what am I talking about? So with one of my most powerful patterns that I like to trade, and you'll be able to see this level through here. One of my most powerful patterns from down and across, right? It's called the L-shaped pattern. It's down and it's across. And then if you flip it upside down, it's called the upside down L-shaped pattern. Up, and then we go sideways there, right? And so when it comes down to my trading system, my number one trading pattern I look for is I'm really trading one type of a pattern, which is what's called the L-shaped pattern, or the upside down L-shaped pattern. I absolutely love it, guys, when it comes to that. On that webinar, guys, that's second link in the description, or if you go to johnsfreetraining.com, you can join my webinar and I'll teach you all the details to my trading system. But look at this level. This is my number one trading pattern, and I use it every single day. And so as you can look at this here, right? Look at this. Let me show you what I'm talking about. Because if we get an upside down up, strong up, must be strong up, then we have this sort of slow sideways. We don't want a strong down like that, right? We don't want strong up and strong down. No, we want strong up. And if we actually let me do this here. Let me show you this here. All right. So this is actually a bit of a lesson in angles in the markets. Okay, I'm gonna go. This may be a little bit more advanced for some of you guys, but over the last 20 years, I've learned some really powerful things when it comes to understanding the market itself. Okay, and then we can overlay some things like moving averages and so on and so forth. And yes, this is all I used to trade, guys. I used to trade like this. Okay, and then I'd be like, oh my goodness, gold's here. Oh, the stochastics overboard. Gold's gonna drop. Now I trade like this. And it's just because the reason why, guys, I'm focusing on the markets here. So what I'm going to teach you right now is what's called angles in the markets and what that actually means to the market, right? So if we're looking for the upside, that there is like a strong move, right? So that means the buyers are really strong. They're really dominant through that move there. But also there could be another leg where the buyers do something like this, right? Where the buyers do, see like that. It's called an angle, right? So see how we actually have very strong dominant move to the upside here, and then that's a very weak move. That's more like the buying legs, okay? Now, if we look at the selling legs, the same sort of thing. If we have a leg down like that, now leg down like that simply means the market's done something like this, right? Overall, you see what I'm saying through that? That's what I mean by the angle of pretty much the angle has been pretty much straight down from there. You could have that angle through there, or you could have where the market does something like this here, where the market might do something like this. See what I'm saying through there? Now, as you can see, if we're looking at the selling leg, the selling pressure here, and this is where it's going to start to make sense here of how to see who's really dominant in the markets by looking at what's called these angles, or it's just another name for like who's more dominant, right? Because for me, trading is all about saying, okay, who's more dominant? Who's clearly in control here? Meaning, are the buyers stronger than the sellers? And if so, guess what? I want to be on the buying side. And if the sellers are stronger than the buyers, I want to be on the selling side, okay? So as you can see here, look, what is this here? It's very strong on the downside. And then look at this here, just very almost just sideways, not really much going on. So that's called what? Weak selling period. And so therefore, when we start to get a combination of a strong move up, buying leg, and then when the sellers come in, the sellers could do that, or the sellers do something like this here, where we're not really, right? We've gone up here, and then now the sellers just see what's happening here. We're not going straight down, are we? We're not going bam, 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 bam on the downside. So what happens with that? A lot of the times, especially if you can get an extended period of, extend this out a little bit more, and it could get in a bit more of an extended period, then what tends to happen is now we have another move to the upside. Some of you guys might call this a flag formation, so on and so forth, but I like to really call it the strength in the moves. It's more like a strength in moves. And as you can see, if we have a look at this back here, look at this here, strong move up, slow sideways, L-shaped pattern, bam, we go for a big move, right? And then look at this here, another L-shaped pattern, and then we go for another move, and then we start to go through some really dominant sort of, we go through that sort of swinging motion there, right? So when I'm looking at, look when I'm looking at gold, look what's happening with gold right now. Gold is like strong up. Oh, John. Ooh. L-shaped pattern, big move. L-shaped pattern, big move. We're getting the L-shaped pattern again, right? We haven't got the beautiful L-shaped pattern where it's what? It's one strong up and then doing that. We've got this up and down angles, as you can see through, up and then down and sideways and up. See where, but this is the first time we're getting what? We're getting the combination of the upside down L-shaped pattern. And as you can see here, here's an example here, here's an example here. Now there's no guarantees this is going to produce an upside movement. What we generally need is we need a breaking above these previous highs. Like there, and we end up breaking above the previous highs, and we end up going for another move. So what we need here is we need a breaking above 2,100. We need a breaking above 2,100 for this thing to say, here we go, right? That's what we're looking at there. That's what we're looking at there, and that's what we're seeing through there when it comes to this. All this here, that's what we're seeing there. So we're getting the L-shaped pattern, and here's the amazing thing here, okay? Here's the amazing thing. I have traded so many charts, and let me show you. So let me show you this here right now, guys, because I think this is going to be really important to show you what I'm looking at here, right? So there's two different main patterns I'm focusing on with gold right now, and the reason I'm getting pretty excited about gold for a potential trading opportunity, right? So I obviously look, what's that? See the L-shaped pattern? This is upside down L-shaped pattern, and then you get the breakaway bar. Again, guys, that's second link in the description. If you want to learn more about the actual trading pattern side of things and trading system, you can join my next webinar. That's second link in the description there. And I'll teach you all the details to it. But the purpose of me bringing this up here is I take so many screenshots of different trades I've taken and different examples, and it's all the exact same thing. But there's another pattern that I like that I've noticed on gold here. So the first one is the L-shaped pattern, but the second one is, I'm just going to bring this up to here. I'm going to show you this here. Again, guys, like as you can see, guys, like I'm a full-time trader at heart. Like, look at all these trades and screenshots and things, and I'm just going to bring this up through to here with you guys to show you what I'm looking at here. Yeah, this is an S&P 5. Oh, the reason, again, guys, it's not. What is this? The L-shaped pattern, right? And look at the move down, right? It's called trading opportunities. When you're trading, you're getting in, you're getting out, and so on and so forth. But here's what I wanted to share with you, okay? Here's what I wanted to share with you when it comes to that. So anyway, oh, what's this, guys? What's this? Traders. What is that? Oh, that's the L-shaped pattern. Oh, move up. Anyway, I'm telling you, you guys complicate it too much. To me, I just look for the L-shaped pattern and the upside down L-shaped pattern. That's the foundations of what I look for in a good setup. You guys that are trying to complicate it and be real smart and fundamental analysis and PE ratios and all these funky dunky indicators, not me. I have a high just stick to the L-shaped pattern because it works. Anyway, so this slideshow here has a few things. Firstly, every single one of them have what? When we get the breakout, we get what? L-shaped pattern, L-shaped pattern, L-shaped, or upside down L-shaped pattern, upside down L-shaped pattern. And every single one of them did what? Ka-ting, ka-ka-ting, 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 right? You see what I'm saying there? Anyway, so I just love it. Remember, it's just beautiful. But that's the first part of it, and that's the reason why I love the pattern so much. It's my number one trading pattern there, guys, okay? Don't complicate it. I don't try to be smart. I'm just, every time I open up my computer every day, guess what? Where's the L-shaped pattern? Where's the upside down L-shaped pattern? That's all I'm looking for. And then I start to overlay some rules of looking at the trend analysis, looking at the moving average, maybe looking at if I'm trading the daily chart on the stock market, I'm looking at also the weekly chart as well too, right? So you really start to combine it to give you a high probability, but the foundation is what? L-shaped pattern. Trade the L-shaped pattern, guys. Anyway, now again, I have the L-shaped pattern is the foundations. Then I have a checklist and also the exact criteria of the entry bar. I'm looking to get off the L-shaped pattern. Don't just trade the L-shaped pattern. I'm looking for a proper candle or a bar to get in on, right? So, but looking at this level here, notice this here. Notice when we go through a channel, notice how when we do that, we end up having the resistance here, and it comes down and finds support, and we get this, and then at the exact same time, we get the L-shaped pattern, right? Same thing through here, right? That's that resistance level there for quite some time. But then right at the very end, it came up, came down for the L-shaped pattern. Look at this here. So all this resistance here with this channel did what? Broke out, came back down, created the L-shaped pattern. And then we had a very big move up. We had this moved all through here. Okay, you have all the resistance point through here. We broke out above the channel. We created the L-shaped pattern. Then we had to move up. You see that through there? So it's a channel. You get the resistance. The resistance becomes support. Right out the L-shaped pattern. Resistance becomes support. Right at the L-shaped pattern. Resistance here becomes support. Right at the L-shaped pattern. Right. So this is where it gets pretty cool, guys. Check this out. Check this out. So, I'm telling you right now, guys, if you do need some coaching and need some helping, I'm your man. I can teach you. I can really teach you some powerful things about these markets. Get you guys really getting good. Oh, John, what's this? What's this? What's this? Oh, John. Oh, look at that resistance point. Resistance. Oh, look, becomes support. Oh, look, John, that's one of those what? Up. It's the L-shaped pattern. Hang on a minute. That looks pretty much exactly like these examples here. Now, by the way, this bottom left chart is a stock chart, right? We're talking about many decades ago, by the way, stock chart. Top right is a futures chart. It's a 2-minute chart. I'm pretty sure, 2-minute chart. Actually, 1-minute chart. Top left chart. This chart up here. Top right chart. I forget exactly what chart that was, but I remember this one down here. This one down here was the DAX chart, because this is the DAX and this is the DAX futures. I'm pretty sure this is a 5-minute chart, and I traded it. The purpose of me saying this, guys, is that every single market really operates the same way, right? We get all these look at this here, same patterns across all markets through here. Okay, and that's what I'm all about, is looking at the proper patterns. So you notice when you become good at reading what the market is telling you, you start to really like, oh, this, here we go, right? So, and then that's where we're seeing this here. So that tells me that once again, if we get something like this happening out of gold, then guess what? We could possibly what? We could start to see some really, really, really big moves up. Now, one thing I want to talk about as well too. Have you noticed that, guys? So have you noticed that? So have you noticed that sometimes when you it's like this video here. One thing I want to talk about. Just talk about it, John. Have you noticed on podcasts, it's like, one question I do want to ask, it's like, why do they say that for? It's like, why don't you just go, Well, and why don't you just go like and just ask the question, right? Instead of saying, one question I'll ask is, why is the sky blue? Or why do you think the sky is blue? You know what I mean? So anyway, it's just funny. It's just interesting. One question I do want to ask you is like, just ask it. And me is like, one chart I do want to show you. We'll just show it. Anyway, so I was talking with one of my clients yesterday about gold mining sector and the gold stocks. They are not correlated, guys. Do not be trying to trade. Do not be saying, well, if gold goes up, then gold mining stocks are going to go up. No, 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 no. Do not be touching it, right? Do not be touching it. Do not be touching it. Because guess what? And again, guys, don't listen to this guy Johnny Howell, right? I'm a guy with half a brain. Maybe some of you guys don't even say. Maybe some of you guys say I don't even have that, but that's okay. And that's good, right? Maybe I have a quarter of a brain. No, all I need is the L-shaped pattern, guys, and I'm good to go. That's my foundations, all right? All the upside down L-shaped pattern, as I've talked about today. So I don't try to be smart. I just look for the pattern that I know that I can rely on. L-shaped pattern it is. Everything else, divergence and P ratios and fundamentals and throw it out the window. The purpose of me bringing this up is when it comes down to the mining sector, is that the mining sector and gold look nothing like each other. Okay, so do not be trying to think. If you're saying, well, I'm going to buy the mining stocks because if the gold goes up, so is the mining sector. Just look at the reality of what it is. Look at the reality. Look what's been happening with the mining sector. The mining sector for the last 12 months has been going down. Well, what's happened with gold? Gold is right at all-time new highs. But the mining sector is pretty much getting really, really close to the ultra low levels. And same for the GDXJ, ultra low levels, right? So there's no correlation there at all. Don't be trying to mix them, say this is the correlation, and you might hear a Peter Schiff say something like that or whatever. No, like who cares what people say? Just look at the facts. Look at the facts. Do not be trying to do this, right? And there's a really, really, really big mistake that people are making these days, and they're trading correlations of things, right? I think the stock market is going to crash and a recession, so therefore I'm going to go buy this market over here. What? Firstly, you think the recession and the market, you think a recession is going to equal stock market crash. That's probably one of the big mistakes there, right? And now you're trying to correlate things, right? Firstly, you thinking something like, oh, I think the market's going to crash because of recession, so therefore that's a big mistake because who knows, right? But then also the next thing is the next thing out of that sentence is that now you're going to go trade something else instead of shorting the stock market. You're going to go long, maybe one of the leveraged instruments or whatever, or one of the instruments when the market goes down, the stock market goes up, right? See, it's all wrong. That whole thing is wrong. One, you're trading something based on what you think. What do I do, guys? I just look for the pattern, right? Just look for the pattern. So that's what I wanted to share with you guys when it comes down to the actual stock market itself. When it comes down to gold and silver. Gold, you can see what's happening with there, but also in the mining sector, do not be trying to correlate them because you're just going to do your head in, right? People probably long the mining stocks right now, and they're just like, this doesn't make sense. Why is this happening for? Why is the mining stocks going down? And why is gold? Well, maybe if gold breaks out, mining stocks are going to start to get excited and go up. Don't do that to yourself. I'm going to trade the mining sector because gold's probably going to break out. Look at the facts. Look at the facts. The facts say what? There's no correlation. Because if there was, mining stocks would be very, 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 very much higher than where they are right now. Quick little update across the actual across all the indices, guys. Looking at the Dow Jones. The Dow Jones, once again, very, very, remember I said before about angles in the markets? Right, so you get what? You get moving, that's a strong angle through there. That's a much slower angle, and that's very, very, very weak, right? What happens is that you start to get these moves, right? Very strong move up. And if they did that, that's sort of slowing, and that's very, very weak. What can happen sometimes is you have a very strong move up, and then you start to get this sort of action, right? Where it does that. See how we had a very strong move up there, but then it was continuing going up, but it just slowly went up through there. This is called slowing. You want to be careful of this pattern, Because guess what? We end up starting to do something like that, right? So the reason why I'm bringing that up is because the market is telling us, look at this here, strong move up, and now look what's happening. It's the same thing, right? It's even though the market's going up, it's very slowly grinding up. Slowly grinding up. In fact, if you actually look at what's going on here, let me bring on the close-up view here. You can see basically ever since the market broke out here, we've been slowly going up, right? We're about 2%. The Dow Jones is only up about 2% from that there. And this is where it's very, very, very dangerous being long right now because one, we're going to get a pullback. The pullback's going to last a couple of months. It's going to be down 8 to 10%, and it's going to freak people out. Get ready for it. Oh no, John, you're an idiot. You don't know what we're talking about. Okay. All right. Look at that there. What is that? If we got something like that, which is possible, that's going to wipe out all this time. That's why it's so dangerous being long right now in the markets. Let's go to the S&P 500. And the same sort of situation. But again, we're just sort of flattening out here. And if we squeeze our charts up, again, look at this move from here to here, right? It's just we had this move up from there to there. And now we've had this move from there to there. So see how it's just slightly a bit slower, meaning what? That's stronger up. But it's not the same angle. It might be something like that, right? That's basically what's happening here. But we're slowly going up. And this is very, 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 very dangerous for people because guess what? People are starting to get really sucked in right now when it comes to that through there. Let's go look at the Russell. The Russell is one of the markets, guys. The Russell is one of the markets that I really am quite bullish on. I see the Russell having nice moves to the upside because it's done nothing here, right? Done nothing. It's just gone sideways through here for a long time. And now guess what? We're starting to build this strength through here. We've got a nice moving average coming up. So I do see this building a bit of a pattern through here before we start to break out and potentially start to see a move to the upside. So really weird. Gold breakout, move to the upside, guys. We also have most of the indices, Dow Jones, Nasdaq, S&P probably have a pullback. But then also on the flip side, we're possibly going to see the Russell break out and start to have a very nice move to the upside.